QuickBooks Enterprise 2021. Two businesses and personal bookkeeping in one QuickBooks file using classes receive payment and make deposit. Get ready because we're going to boldly account where no accountant has accounted before with QuickBooks Enterprise 2021. Here we are in our practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our chart of accounts. We set the accounts to be the default to assign classes. We've set up our classes for two businesses or two different locations for one business, however you want to think about it. And then another personal file or another personal account all in the one QuickBooks system, breaking them out with the use of classes. We then went down here and we're thinking about the revenue cycle of things. We talked about two different methods of a revenue cycle. One, if we're going to be constructing our financial statements directly from, say, a bank account or from bank feeds. And two, if we need a full service type of system where we would have an invoice, we would have to then collect on the invoice. In that case, we would need to be tracking the accounts receivable. Now, again, if you have two separate businesses that one, you don't have receivables, in other words, like gig work or something like that, where you can get the money directly from the deposit, then, and you can record it clearly from that point, like it's going through PayPal or something like that, and the other business does have a receivable, then you're in an easier situation. If you have two separate receivables that you're trying to keep separate in the same QuickBooks file, we can't set up two receivables, and we set up the ability to do that. And so we're kind of working in that system because it's going to be the more difficult system. Obviously, for the personal business, you would simply get money from like a W-2 job or something like that. And that would be pretty straightforward. That would be going right into the personal account. You'd be able to see that in the checking account, although it could be somewhat complex to break out between, say, gross pay and net pay if you have like a 401k plan and whatnot. But right here, we have entered the invoices. Now we're going to be thinking about receiving the payments. Let's open up our financial statements by going to the reports dropdown. Then let's take a look at the company and financial. Let's take a look at the profit and loss by class, the P&L by class, otherwise known as the income statement by class, changing the dates from 01/01/21 to 12/31/21. So we have our B1, B2, Business 1, Business 2, and Personal that we have broken out both in terms of classes as well as different accounts, giving us that double check, that little internal control. Then we're going to go up top and do the same thing on the balance sheet side of things by going to the reports drop down, company and financial. Let's take a look at the balance sheet by class, only available if you're using the enterprise version of it. If not, then you could just use the profit and loss side, changing the dates from 01/01/21 to 12/31/21, and then we're going to say OK. On this side of things, we have our receivables that we broke out. That's where we're concentrating in on at this point. We broke them out, in our case, by two separate receivables and two separate classes, once again giving us kind of that internal control. Because we have two separate accounts of the receivables, when we receive the payment, we can assign the two separate accounts, which can be a little bit easier to do to get our payments going to the right places. So now we're going to be receiving the payment. So we're going to be saying that these are becoming due. We're going to be collecting on them at this point in time. Back to the home page. So we could do that with this form, the receive payment form. So we create the invoice. We're going to receive the payment. If I select this item, then notice up top we have two separate drop downs for the chart of accounts. So if I hit the drop down, I got two separate accounts receivables, which can help us to manage those two customers if we do have customers that are going to be going through accounts receivable for the two businesses. So let's imagine we're receiving payments from these customers now. If I choose customer number 5, there's nothing due. They have no invoice outstanding, so that was a cash customer. If I hit the drop down and go to this one, notice I get this pop-up. I know this customer has open invoices. Why don't they show up in the invoice table? So if I have an invoice or money coming from this customer for something they paid me on, and it's not showing up, there's two reasons. This customer has open invoices in another accounts receivable. That's typically going to be the reason for us because we have two accounts receivable. So it'll basically tell us that, and it'll force us basically to choose the correct accounts receivable, then showing the amount that's going to be due down in the bottom. Now, as we record this, note what's going to happen is the accounts receivable is going to go down. We can see that it's going to be selecting the correct accounts receivable here, so that is good. It's going to tie it to the proper invoice to record the invoice as being collected on, and the other side is going to go into undeposited funds. That's the normal default standard rule. However, we could deposit it directly into the checking account if we so choose, but we would have to turn that that on in the settings to be able to do so. So let's take a look at where that option is. If I close this back out, say let's close this back out and say no. And then I'm going to go to the edit drop-down preferences. This will close all the windows for us, by the way, but let's check it out. We're going to go into the general. Actually, that's not it. It's in the payments. It's in the payments. We're getting payments here. So payments, and then company preferences up top. Company preferences up top. And this item here that says use undeposited funds as the default. If that's checked, you will not have any option. You could still use undeposited funds if unchecked, but you'll have the option then to put it into a checking account if you so choose, if unchecked. So let's uncheck it. It's going to close all the windows for us now. So we're going to have to open everything back up, but that's okay. We'll uncheck it. And so now everything's closed. I'm going to go back to the company drop down. We're going to open up another window, open up the home page so we can see the home page again. Maximize that. Let's go back into a receive payment. Go back into the receive payment here. And then we have our same receive payment option. Now we've got this drop down. So now we have this drop down. So every time we record a receive payment, accounts receivable is going to go down. Typically, it will go into undeposited funds if using this default, but you can assign a checking account if you so choose as well. Now, if you have two separate checking accounts for the different businesses, or possibly 3 checking accounts, that would be good. And then you can manage each of the checking accounts. If you're just using one checking account, then you could just use the one checking account here. So this would be a nice option if you wanted to basically assign to the actual checking account. Now, the reason that it goes through undeposited funds typically is because if you're going to group something that's going to go on the bank statement, it needs to be in our books in the same grouping as it's in the bank statement. So if I have multiple payments from a customer, for example, that are going to show on the bank statement as grouped together, then I want to go through undeposited funds and then group them in the same fashion when I put the money into our side, so that when we reconcile, which is a key component of the process, then I'll be able to tie it out easily. But if we're getting check by check and recording check by check, and I'm going to deposit it in the same format, I don't need the added step of then recording the deposit. I can just go directly into the checking account. That can be useful if we have multiple checking accounts here. You know, we can assign the checking account at this point in time. So that's going to be our option. We're going to go through undeposited funds here, and so that'll be the standard. And then once again, I'm going to go to the second one. I'm going to say okay. So it's telling me, hey, look, you're in the wrong receivable. So I'm going to say, let's take a look at the right receivable. And when I do, it'll show up down here. So I'm going to, and there it is. So then I'm going to check it off. And then if you do not enter an amount received, that's okay. It's going to populate the amount that I'm going to be getting up top. Let's say it's an e-payment, for example. And once again, this is going to decrease the accounts receivable, and the other side is going to be going to the undeposited funds. Let's go ahead and save it with this blue button. You can't see at the bottom too well, but I'm going to save it down there. And then I'm going to close this. Let's open our reports back up because it closed our reports on it before. Reports drop down, profit and loss by class, changing the dates up top from 01/01/21 to 12/31/21. So there's this side, other side, balance sheet, reports drop down, company and financial, balance sheet standard. And this one, I'm going to change the dates up top. Actually, I want the balance sheet by class, not just the standard balance sheet. I'm closing that out. Reports, company and financial, we want the balance sheet by class. Available only in Enterprise. I'm going to say okay, customize that one, changing the dates from 01/01/21 to 12/31/21. Okay. And then okay, and then now we have this amount went out of the accounts receivable for, I believe, B2, and it goes into undeposited funds. So double clicking here, here's the 7,500 payment, and then we see it coming out of B2. So there is that item there. So then if we were to go back to the home page, if it goes into undeposited funds, then we got to go through to the deposit side of things. So then we're going to go to deposit. And I'm just going to check this one off. So I'm going to check it off and say, okay. And now it's going to this checking account. So once again, if I had multiple different checking accounts for the different businesses, which would probably be the best thing to do, but we're not doing that here, then you'd have to choose the checking account. I'm just going to put it into the one checking account at this point in time. And you could then assign a class if you so choose. Notice it says customer B2. So I might put the class here as B2, to match that out. But again, the checking account's going to, if I only use one checking account, then nothing we do is going to be perfect on the checking account. So by assigning a class, we'll be able to see an idea of the increases and the decreases, but the beginning balance is going to be, you know, when we originally put the money, wherever we originally put the money in, and we only have the one checking account. So let's see what that looks like. If I say save it, close it, and then I'm going to go back to the balance sheet and say, okay, I'm going to tell it to stop showing me that pretty soon. Now, undeposited funds has going down, and then we're going to say in the checking account, then the checking account has going up, and we put it into B1. Is that what we put it into? No, I'm going to go to B2. We put it into B2. So B2, and so there it is. Here's the split, and here's the 7,500 going into there. If I double click on that, that's going to go to our activity here. So I'm going to close this back out, close this back out. So note that when we do the bank reconciliation, we're just going to have the one account total, but it's breaking it out by the activity that we put in place, the other account, the class that we're going to be putting in place. So that'll give us an idea of the increases or decreases, but it's not as ideal as it would be if we had basically 3 separate checking accounts. If we have 3 separate checking accounts, however, of course, then we got to make sure that we have the transfers going properly between the checking accounts and reconciling 3 different checking accounts that we would have set up. Let's go back to the home page and do it again. So I'm going to go back and say, okay, let's receive another payment. Let's receive another one. And I'm going to say that let's just choose the next one, customer 1, nothing for customer 1, customer 2, nothing for customer 2, customer 4, nothing for customer 4, customer 6, nothing for customer 6. Let's do this one. So we have 2 here for B1. Let's go ahead and say that we have one of them. I'm going to choose one of them, and it's going to populate what we received. I'm going to say it's an e-check. Now, again, we could put this directly into the checking account at this point in time, so I could apply it out there, and let's say save it and close it. This time it's not going to go into undeposited funds, so I'm going to say save it and close it. Let's go back up to the balance sheet, and we see that this one came out of B1. So this is a decrease to B1, and the other is going to the checking account. So I'm going to close that back out, going into the checking account. And so the checking account is here, and now it's coming directly from accounts receivable. So we put it directly in there. It's following along then with B1. So it applied it out to the correct class in terms of the checking account when we went directly there. When I closed it to the deposit screen, I had to add the deposit. So it would be a little bit easier to assign out the class to receive payment because it'll just be driven by the invoice. If you go through undeposited funds, then when you make the deposit, you'll have to basically assign the class again. So let's check it out one more time. If I then go, let's go to B2 here, and I'm going to say, okay, that's going to be in the second receivable like it told me. I have 3 of them in here. I'm going to choose the 14. I'm going to say, okay, it's going to populate up top. So this time, let's put that into undeposited funds again. So now it's going to go into that clearing account, but the undeposited funds, there's one account, right? And then I'm going to have to take it out of undeposited funds and deposit it. So I'm going to say, okay, let's save it and close it. And this was the 14. So if I go back to the balance sheet, I'm going to say, don't show me that again, please. Don't show me that again. I've seen it too many times. So now we have the 14 here. So there it is. So there's the 14 once again, increasing. The other side went into or out of the accounts receivable for B2. So there it is, going out of B2's accounts receivable. And then I'm going to go ahead and deposit it by going to the home page. And then as I do it one at a time, you might say, well, why would I do it that way and not put it directly into the checking account? If you had multiple deposits that you're combining together that are going to be on the bank statement in a different format than one deposit at a time, one invoice, related deposit at a time, then that's when you would need to group them together. And so I'm going to say, and that's why you might use the receivable one going directly into the bank account and one not. I'm going to check this off. And so there we have it. Now, since it's going through undeposited funds, and undeposited funds isn't assigned to a class here, because we have one undeposited funds that is going to be set up for the 2 classes, we'd have to assign the class. So I'm going to say this is going to be going to to B2, which I can see by the customer, and I can go back to the invoice and see if I so choose. I'm going to save it and close it, save it and close it, and then go back to the balance sheet. And then I'm going to say in B2, we have that 14,000 here, and then it decreased the accounts receivable for B2 accounts receivable, decreased undeposited funds, which is now at 0. It's now going back to 0. Now let's look at the supporting accounts for accounts receivable here. And see what it looks like breaking it out by customer. Reports drop down. We're going to go to the customers and receivable, and I want to look at the customer balance detail. Customer balance detail, and then, so this is all the customer detail, and we can see that the invoices and the payments going up and down and the balance due per customer. And then again, if I want to break this out by business, B1 and B2, I can then use the filters option, and I could say I want to go to the filters, and we want to filter not by all accounts receivables, but rather by the particular B1 accounts receivable, for example. And then we see the increases and decreases for the customer and for B1. We can do the same, of course, for B2, filtering. And let's see, I just want to see B2's receivables and say, okay. And then we have our B2 receivables, the bottom line tying out to the 9,000. That 9,000, then if I go back to the balance sheet by class, be the 9,000 for B2.